Hello and welcome to Trading 5 Talents. In today's video, I want to give a portfolio update for January of 2022. But before we get into the actual trades that I made, I want to take a look at the markets and how they performed this past month. So this is the ETF for the Dow Jones, and you can see in this monthly candle, it's a huge red candle, and you can see it was down negative 3.3%. All right, so let's look at the S&P. So the S&P 500 ETF. Wow, another huge red candle, and you can see this wick coming way down here. So negative 5.27% for the S&P, and now we'll look at the NASDAQ. And once again, huge red candle in January, negative 8.75%, but it had a huge wick all the way down here. So it was a very red market all across the board, and as you can see by the thumbnail title of this video, I was also very red in my portfolio, had huge losses, and we'll take a look at what happened. All right, here is my trading dashboard for this month. Just like the markets with their red candles, I also have a red candle here in my trading dashboard, and this is for January, and you can see that I lost $7,948. So that was an ROI of negative 21.44%. This trade log is a little bit different than the one that I have as a template because I'm also including the lifestyle trading for the Tesla. And you can see down here in January that I didn't record a loss down here. I took this whole loss out of my personal portfolio because I want to keep the money for this loan intact. I don't want to touch that because that's money I do owe back. So I took all of the loss myself, and that's why it's such a large ROI right here, negative 21%. So let's take a look at some of these trades and what happened. So here in January, let me just go over here. Let me show you that this is just January. That's selected. You can see all these red trades. So these are all the losing trades. Yeah, I had some winners in there, but my losers completely offset all of my winners. I added a slicer up here, so now I can sort by trade type, and in the next version of the trade log, I'll also put this in there along with another update that I'll release later on. But for right now, this slicer just sorts by trade type. So if we just look at, we'll just start at the top, call credit spreads. You can see I made $46 off of credit spreads on Tesla, Amazon, Lucid, and again, Tesla. So if we look at debit spreads, I didn't trade any debit spreads. Oh, I did. Lost $80 on that one. Okay, put credit spreads. I lost. I wish I made, but I lost $1,304. So all these put credit spreads are Mara, AMD, Tesla, Lucid, and Amazon, and you can see the losses are over here. I'll be posting a video later on about spreads, both debit spreads and credit spreads. I've had mixed results with them. I probably just need more practice with them. In any case, I'll post a video later. All right, so those are the spreads. Let's look at the short calls. And this is where I made most of my money for the month, $1,193. You can see some familiar ticker symbols here. A lot of these are names that I'm holding, but you can see that all of these short calls are all profitable. And so usually my calls are generating most of my money these past few months because I'm holding so many shares of stock. So that's why this is all green. So if we look at the puts, just one cash secured put on Fubo, and that was a $90 profit. Not much there. All right, so where are all the losses coming from? They're coming from the stocks, and you can see $7,893 lost in stocks. Now this is realized loss. This isn't portfolio loss or unrealized loss. This is actual realized loss that I had in these tickers right here. So why do I have these losses in my portfolio? Well, if you remember from the different indices, you saw the big red candles. There was just a lot of negative pressure on the markets this past month. So obviously there's a lot of pressure on my portfolio with all my stock holdings. Because the majority of my portfolio was in stocks and I use margin in my account, I got several margin calls this past month. I think there was like maybe 3 4, 5 of them. And so I had to do something about those margin calls. And one thing that I had to do was deposit money. And so my first margin call, I deposited more money out of my bank account. And so that covered it. But then the market kept going down. And so what I had to do then was start selling some of my stocks. So what ended up happening is I started liquidating some of my stocks that I've just been holding these bags for a while, and I really couldn't get too good of a premium on the covered call side. So those are the ones that I parted with first, and also the ones that were closest to the cost basis that I had. So for example, with Fubo, you can see over here, I bought them for $15 and I sold them here at $13.11 and $11.96. So this was actually a cash secured put. I was assigned at the $15 strike price, and so I sold these at $13 and about $12 for these losses right here. So that was bad. But then you can also see that I got rid of my solo holdings, I got rid of my F-Cell, and also my Workhorse. Those were the ones that I really wasn't getting a lot of covered call premium, so I parted with those. So I thought that this would be, I guess, advantageous so that I don't have to keep bag holding. Yes, I'm going to be taking a loss. There was no getting around that, at least in my case. So I thought I could get rid of some of these bags, and I thought that would be the end of it. And unfortunately, it was not. I still got margin called, so I still had to part with more. Some of it was voluntary, some of it was involuntary. Robinhood actually liquidated some of my shares to cover the margin calls. I think the reason Robinhood couldn't liquidate my AMC and my Mara and my Riot and my BlackBerry, or at least some of my BlackBerry, was because I was selling covered calls against it. They were already being used as collateral, so Robinhood couldn't liquidate that. I think that's the reason why they couldn't liquidate it. So the ones that I guess I really didn't, or I planned on selling anyway at a loss, I didn't protect them with a covered call. So if a margin call came, at least that would be, I guess that would be the sacrifice, right? That would be the shares that I would cut loose and to cover the margin call. Even so, more margin calls. The market was still very punishing on my portfolio this month. So I had to let go of some BlackBerry. I had to let go of AMC. I had to let go of Lucid. And then I had to let go of more AMC. So week after week, it seemed like even every few days, I had to let go of more and more shares just to cover the margin requirements in my account. So a total loss in stock of negative $7,893. And again, that's pretty rough. For me, it is, at least. For some, it may not be that bad, but for me, that was like 20% of my portfolio. And yeah, it wasn't a good month in the stock market, but I guess, that comes with the territory. If you're going to be in the stock market, in options trading, eventually you're going to lose some money. And this was my month where I lost a lot of money, but I'm not going to let it get me down. I think we'll be in good shape, hopefully, for the next month and this month of February and for the months going forward. So with this loss, I probably wiped out a month and a half of gains. So basically all of December and then half of last November's gains. So I'm still up on my portfolio overall. I'm just getting off to a pretty bad start in 2022. Like, most traders are, at least that's what I've seen on social media. Another silver lining that I can see coming from this loss in January, one, obviously I already mentioned, is I got rid of some bags that I was holding, but secondly, I'm also freeing up some capital. So that's a really good thing. So when the market does rebound, at least I'll have that capital back to make some more plays. So with big failures like this, not only in trading, but in any aspect of life, you really have to learn from these failures, because if you're not learning from these failures, then you're probably going to make similar mistakes in the future. So I feel like I've learned some things about my trading that I need to fix in the future. One is not to bag hold, if possible. Two is to have more free cash on hand, or more capital, or more buying power on hand. Because if I had more cash on hand, I wouldn't have to sell some of these stocks to cover margin calls. And the third thing that I really learned is not use so much margin. Margin was really a no-brainer for me going into trading the wheel, just because it was cheap to borrow the money. You know, things were going up, things were looking really well. So of course, yeah, I got confident and I just used all my margin. And obviously I shouldn't have done that, because when things like this happen, those margin calls come. So those are some of the lessons that I've learned. I also learned that when you're in a margin call, you can still sell covered calls against your stocks. And so even though it says that I was restricted from opening any new positions, I really think that means you can't open any long positions. One, because you're in an account deficit and you don't have any money to do that. But I was completely free to open up covered calls, and I did that sort of to protect certain shares. So if I didn't want my AMC called away, I opened covered calls on them. If I didn't want my Riot called away, I opened covered calls on it. But if I didn't care too much about, let's say, BlackBerry or Fuel Cell, I left those unprotected. So that's what would have been called away, or during my margin call, to settle that. But one of the problems I also had during this month with these losses, if we go back to these spreads here, I'm just going to show all the spreads. So if we come back to these spreads, you can see these big losses right here, you know, the ones that are over $300, $400. Again, those were able to be closed earlier. The reason I let them expire and expire in the money and take these max losses is because I did not have enough buying power to actually close them because of the margin calls. So, you know, as the market went down, it just seemed like it was a domino effect for me. I didn't have any more cash available to deposit. Therefore, I got margin called. Therefore, my stocks were sold. I was in an account deficit. Therefore, I couldn't buy to close some of these credit spreads, which just added more pain to the portfolio. Another disadvantage besides these huge losses is that I'm now below the day trade limit of $25,000 in my portfolio. So I can't make these quick trades like I was used to making over the past few months. So I have to wait till my account gets built back up, and then I can start making those quick trades. So what are my plans for February? Well, I already mentioned it, I think in my last video, about keeping the wheel simple when my stocks are way below my cost basis, which they all are right now. Then I'm still selling covered calls, 90% chance of profit, exiting at 50% max profit, just to, you know, be safe. You know, I have also, and I did that in a couple of these trades this past month, of selling credit spreads. So call credit spreads. So basically it's like a covered call plus you buy another call. And if that covered call goes into the money, instead of losing your shares, instead of your shares being called away, just that long call gets exercised. And so, yeah, you lose money, you lose revenue, but you get to keep your shares. And so I used some credit spreads for that purpose this past month. But I also have potentially another strategy that I will be testing out in the month of February, and I'll make a video on it. So I don't know if it's a viable strategy. I don't know if it's just self-delusion. So I'm not sure if this would even work, but I'm going to test it out and I will let you know. I'll introduce the strategy and I'll also show you my progress to see if it's something that maybe some of you might want to do. But that's it. It's a very somber update. I am not able to make my Tesla payment for the month using trading, so that's going to have to come out of my bank account, which again, I was prepared to do. I just didn't want to do it. And so I will need to make up for those losses in the upcoming months somehow by trading the wheel. So if you have any questions about this video or some of the trades that I've made, then go ahead and leave a comment down below, or you can ask me on Twitter at Trading5Talents. Also, if you want to receive more updates on the wheel strategy and also the upcoming strategy that I think might work when your stock is way below your cost basis, then go ahead and click on the subscribe button and turn on the notifications so you can catch those updates. Until next time, trade wisely and take care.